Okay, here's the boring bit. Anything you hear or see in this video is not investment advice. It could be absolute rubbish. Please do your own research. Hi there, welcome to the channel. I'm Justin Waite, and to regular viewers of my channel will know I predominantly talk about small UK tech stocks. But over the last few weeks, I've been doing more and more research into Bitcoin. And I've come to the conclusion that it is essential to have some exposure to it, as I believe it could massively outperform. In fact, I genuinely don't think I've seen a bigger opportunity. I know that sounds like a lot of hype. Now, after what I'm about to show you, which is I've put together some research, if you agree with me, don't go mad. If you intend to take some positions in Bitcoin, don't go mad. Bitcoin is historically very volatile. And as far as my portfolio is concerned, I'm talking about an exposure of, say, 1%-ish of my entire portfolio value. Okay, that's with other stocks. So it's about getting exposure to this asset because it can, I think, like I said, I believe it will massively outperform. So what I'm going to do now is give you 5 reasons why I bought Bitcoin. All right. Reason number 1 is trust. Now, when money is issued by a central bank, people are able to trust the value of the notes as they're all coming from a single trusted source. That's the Bank of England. That's from their website, okay? Fiat money, central money, bank money is based on trust system. Now, Bitcoin creator Satoshi Nakamoto stated in his white paper that the root problem with conventional currencies is all the trust that's required to make it work. The central bank must be trusted not to debase the currency. But the history of fiat currencies is full of breaches of that trust. Let's look at Bitcoin, okay? The first paper published on Bitcoin was entitled Bitcoin, a peer-to-peer electronic cash system, and described as a system for electronic transactions without relying on trust. You don't need trust. Bitcoin has now been in existence for over 10 years. It survived several aggressive sell-offs, a massive amount of criticism, and grown, despite all this, to a value of $155 billion. Trust in this trust-free asset is growing. Why? This is how it works. Bitcoin is decentralized, that means it's not from a central bank, it's a digital currency without central bank or single administrator that can be sent from user to user on a peer-to-peer Bitcoin network without the need for intermediaries. Transactions are verified by the network, that's lots of different people, the nodes through cryptography, and recorded in a public distributed ledger called a blockchain. Everyone keeps an eye on everyone else, so no one needs to know or trust anyone, as a whole has to be verified by many people. All right, that's reason 1. I think trust in Bitcoin is growing. It's been here for 10 years. Number 2, its dominance. Bitcoin is valued at 153 billion. It makes up 67% of all cryptocurrencies traded. It is 3 times larger than the next 9 biggest cryptocurrencies put together, which means any positive development in the world of digital currencies or blockchain is likely to have a positive move on Bitcoin sentiment. Next, tech adoption. The world's biggest companies are adopting blockchain technology. This is the tech behind Bitcoin, from Amazon to Apple to Microsoft to Alphabet to Walmart, all the big companies. The next reason is very important. And this has only happened recently, and that's why I believe now looking into Bitcoin is a very good time. It's time critical. There's 2 basic reasons why it's time critical, and I'll point this out. The next reason, institutional backing. For a long time, institutions didn't have any exposure to Bitcoin. Now they can get that exposure. In September, okay, the Bakkt exchange started physically delivering Bitcoin future contracts in September 2019, which opened the door to institutional investors to take positions on the cryptocurrency in a federally regulated venue. You see, from 10th of October, they're backed. As we continue to build the Bakkt Bitcoin futures contract, we reached new trading record of 212 contracts traded yesterday. The offering demonstrates that more and more Wall Street institutions are taking a close look at digital currencies and want to gain exposure to this new asset class. That's John Torado there. They did have futures before this, but they were cash-based. They were settled in cash, not Bitcoin. And this was from the CME exchange. But look at the demand there. These are quarters, okay? Now, of course, the price is affected. The price affects the demand. But cash will be available since 2017 on the Chicago exchange CME group. Despite the pullback in Bitcoin prices, Q3 customer interest in CME Bitcoin futures remained strong, with daily open interest of over 4.6 thousand contracts, up 61% versus Q3 2018. Demand is growing. And more importantly, demand via institutions, the big money, it's growing. And they can't really get into all cryptocurrencies because they need liquidity. Bitcoin has that liquidity. Okay, now that demand, they want sort of to give that to that opportunity to get exposure to Bitcoin to retail investors. Several ETFs have been proposed to the Securities Exchange in America, the SEC. Okay, this is the latest that's been applied for. So, and this guy is Matt Hugan. He says 2 years ago, and this was literally last week, all right, we're in October 2019. 2 years ago, there were no regulated insured custodians in the Bitcoin market. Today, there are big names like Fidelity and Coinbase with hundreds of millions of dollars of insurance from firms like Lloyd's of London. 2 years ago, there were no regulated crypto exchanges. Now, 6 out of the 10 big crypto exchanges are regulated by the New York Department of State with market surveillance technologies in place. And most importantly, 2 years ago, it was one-sided, inefficient market. Today, we have 200 million plus in volume and regulated futures every day. Now, Bitcoin is among the most efficient institutional markets in the world. That's Matt Hugan. The ETF was turned down. And it will do. It still seems a very volatile asset class, right? It'll happen, though. I guarantee it will happen. This is the other reason why I've decided to buy Bitcoin. It's the best performing asset ever. If you'd put $100 into Bitcoin in July 16, 2010, it'd be worth $7 million by March of this year. Okay? Bitcoin is also 2019's best performing asset, up almost 123% for the year. Bitcoin has more than doubled in 2019, far outpacing the 31% return for US tech stocks, which Goldman Sachs deems the best performing asset class year to date. Outsized returns could attract, I just got this from something else, I think it definitely will attract. If you want a return, it will attract money, full stop. It could attract interest from big investors, and it's starting to attract attention from big investors. In the yield-starved traditional financial markets, at the moment, the markets are dire. The question you're going to ask yourself, though, is, will it continue to outperform? Okay? And I think it will. Do you know why? It's anti-inflationary. Here's the importance of inflation in our lives, okay? And what it does to our money. The UK and the US have a 2% inflation target. But, according to the Office of National Statistics, the prices in 2017 were 307% higher than the average prices throughout 1980. That's an average inflation rate of 3.87%, okay? Keep that figure in mind. So every year, your currency is getting devalued by 3.8%. I'll put that into context. In other words, you would need £4.8 in 2017 to buy you what £1 would have purchased in the 1980s. Or, roughly speaking, if you'd hidden 40 grand in cash in your mattress in 1980, it would only be worth 10 grand in 2017. Now, this inflation continues. Central banks continue to pump money into the system and devalue their currencies. Happened this week. Look at this. The Bitcoin rallied because the Fed announced a pseudo QE. They didn't like to call it QE, but look, this is Ivan on tech here. Fed starts QE, also Fed. This is definitely not QE. Never believe anything until it's officially denied. This is Bitcoin rocket fuel because, of course, central bank currencies have been devalued. Bitcoin's not. Travis King there. I want to emphasize that growth of our balance sheet for reserve management purposes should in no way be confused with the large-scale asset purchase programs. That's Jay Powell, head of the Fed, the biggest bank in the world. Bitcoin is an insurance policy against monetary and fiscal policy responsibility. Welcome to QE4. Peter Schiff there. Within a few months, it's likely the Fed's balance sheet will exceed 4.5 trillion peak it hit prior to the Fed doing QE after the financial crisis, this was. So sometime in 2020, the Fed's balance sheet will grow beyond $5 trillion and will likely keep growing indefinitely. Don't worry, it's not QE, the Fed said. So why is this different from Bitcoin? Because central banks can keep printing money, keep printing the supply. You increase the supply, and that's what happens. It devalues the currency. This is different to Bitcoin. Look at this chart here. I'll point this what this means. The purchasing powers of central banks' currencies will continue to decrease as they increase supply and stoke inflation. So on this chart, essentially the blue line, okay, is the amount of Bitcoins. On the x-axis on the left, you can see 3 million, 6 million, 9 million, 12 million, 15 million. We're around about just under 18 million Bitcoins in circulation now. There's only going to be 21 million, okay? There's a finite amount of supply. So we've already mined 83% of Bitcoins in circulation. The orange is percentage inflation of Bitcoin, inflationary aspect of Bitcoin, okay? We're around about 3%. It's about 3.82%, which is below, historically, what the UK has had over the last 30-odd years, okay? 3.87%. This is going down, though, because the supply of Bitcoin goes down, okay? And it'll stop at 21 million. Now, this is very important. Every 4 years, halving happens, means less Bitcoin comes into circulation. What is blockchain halving? So at the moment, the miners who get rewards per block is divided into two. That's what happens. They're divided into the rewards they get. So at the moment, they get 12.5 Bitcoins every time they complete an equation and they complete a blockchain. So this will be halved to 6.25 in May next year. This halving takes place every 2,000. I don't want to confuse you, 210,000 blocks. So this continues until 21 million Bitcoins are in circulation. All you have to know here is that the supply is going down, okay? While demand is going up. What halving means for the value of Bitcoin. Currently, there are 1,800 Bitcoins produced every day. This equates to an annual inflation rate of 3.82%. Once the halving occurs in May, there will be 900 Bitcoins produced every day. This equates to an annual inflation rate of 1.8%. For the first time ever, Bitcoin's inflation rate will be below major central banks' inflation targets of 2%, creating a hard asset like gold. This will halve again every 4 years, and inflation will halve again until 21 million coins are in circulation. Germany's seventh biggest bank, Bayern LB, undertook a detailed study of Bitcoin. Their conclusion is this: Bitcoin was conceived to be an even harder asset than gold. Hard assets are purchased with an expectation to generate value in the future, as opposed to soft assets like fiat currency that lose value. This is Tyler Winklevoss, one of the Winklevoss twins, of course, big investor. Apparently had a big argument with Mark Zuckerberg about Facebook, who owned that, but he's a big investor in Bitcoin from the start, pretty much. He says on Twitter, "If you found out why Bitcoin isn't going to disrupt gold, let me know. I still haven't found a reason." Rhythm Trader, guy worth following. He said, "The only flipping I care about is Bitcoin versus gold. Gold, 7.5 trillion value. That's the market cap. That's the value of all gold out there. Bitcoin at the moment is 1.55 billion. Once Bitcoin overtakes gold, each Bitcoin will be worth over $350,000 per Bitcoin. At the moment, with trading around about $8,500. We live in a digital age. The flip is inevitable." So Bitcoin versus gold. Let's look at the similarities. Bitcoin, they're both currencies. They're a transfer of wealth. They're a store of value. Both can be mined. Scarcity is one of the reasons that give both value. But the scarcity is where the difference between the two assets begin to show. Bitcoin is hard capped at 21 million, while there's potentially an endless supply of gold that can be tapped into. Nobody knows how much gold is out there, okay? It's still being mined, and as tech gets better and mining sort of techniques get better, it can probably continue to be mined. Gold having a physical attribute is both a pro and a con for the chemical element, making it ideal for jewelry, but preventing it from easily being transferred or stored. Bitcoin, on the other hand, has no physical footprint for storage and can be sent in seconds with a click. I'm going to show you something called the stock-to-flow ratio. It's quite complex, but here it is. Gold and Bitcoin have a similar stock-to-flow ratio. The stock is the size of the existing stockpiles or reserves of an asset. The flow is the yearly production. So gold has a high stock-to-flow ratio because its yearly production flow is low, making it scarce or rare, so a lot of it's been mined, a lot of it's out there. You can't add to that. The supply can't be increased quickly, okay? Bitcoin stock is the number circulating at the moment. It's 18 million Bitcoin. The flow is the number produced per year. At the moment, it's 657,000 Bitcoin a year. This will go down, of course, in May next year. So the current block reward is 12.5 Bitcoin. Look at the stock flow ratios there. Bitcoin has a stock flow ratio of 27. It's above silver, it's below gold. By 2022, Bitcoin's stock to flow ratio will overtake that of gold. Here's a chart by a guy worth following. Plan B, his name is, or his Twitter username is at 100 trillion USD. Okay, this is what's happened as halvings have happened. The halvings, Bitcoin, the rewards have halved over the years. So if we look across on the x-axis on the left here, you have the price of Bitcoin. Okay, this has been predicted all the way, and it's sort of fitting this model. Okay, now if you go to the top right, we will see 2020. In fact, bottom right first, 2020 is the date. That's when halving will happening, and they reckon right now it'll go up to predicted value for Bitcoin after halving in May will be 1 trillion. That's the value in its entirety, which translates into a Bitcoin price of $55,000. That's around about halving time. There may be some delay, but that's on halving time. Okay. Plan B, there he is again. He did a survey. Do you believe Bitcoin? He says, well, the stock-to-flow model predicts 100,000 grand per Bitcoin before December 2021, or else the model fails. Do you believe Bitcoin will be 100K before December 2021? 55% of people said yes. There's obviously voted no. But over the longer term, this is what's going to happen. If the model continues to satisfy its future predictions, Bitcoin could reach $100,000 in 2020. And then it could reach $1 million in 2024. This is every halvening. And then by 2028, $10 million. It seems far-fetched, but I believe it could happen. I really believe it could happen. And this is why I think it will happen. The circle of Bitcoin wealth creation, okay? The price has increased. It's the most successful asset of all time. People want exposure to this. Institutions are showing they want exposure to this. So they buy Bitcoin, they accumulate Bitcoin as an asset. The price increases, okay? Demand increases. Then a halvening happens and supply decreases. This pushes the price up again. More people demand Bitcoin because it's outperforming. And again, every 4 years, the supply decreases and it'll continue to decrease until we get to 21 million. We're already at 18 million in circulation. Okay, only 3 million left. This, I believe, will exponentially rise as the price increases, demand increases, supply decreases. I hope you liked that video. If you did like that video, I will be covering Bitcoin on a regular basis now. So by all means, hit that subscribe and notification bell. Don't forget the bell. Like I said, if you are considering getting involved in Bitcoin, I set an account via Coinbase. There are lots of different things. And go with a well-known, sort of exchange if you want to buy Bitcoin. I'll do another video on how you get into Bitcoin soon. By the way, I'll put a link to Coinbase below. But it's very hard to set up an account, and it's meant to be because of security. You have to do two-step verification, all that stuff. You have to get ID, all that. But it's and Coinbase I find very easy to use. There are plenty of others. Other people would say, Coinbase is rubbish maybe, but it's very secure. I've got no problems with it. But like I said, if you are going to get involved, be careful. It's very volatile, and like I've said with my previous videos, scale in, take time. There's plenty of time. Don't go nuts now, okay? But I think, I'm getting some exposure to it because I believe this asset class, Bitcoin, will outperform, especially in the next 3-4 years, as the supply decreases and demand increases, and that pushes the price up. Like I said, if you enjoyed this video, hit that subscribe button and the notification bell. Give it a thumbs up, give it a share if you would. Thanks very much.